Meltem, do you want to introduce your capital cycle kind of observation?
Yeah, I think this is where it starts to get interesting as an investor. If we look at capital cycles, there is the circularity of capital challenge, particularly in the earlier stage, particularly software ecosystem, where there's a ton of capital coming in. It starts with venture capital. We're seeing it right now in AI. There's an estimate out there. I think Andreessen Horowitz, A16Z, put this number out. 80% of venture capital that is going into AI startups is going to get allocated to compute, right? Whether that's semis, people buying GPUs, whether that's cloud costs, whether that's data center and GPU costs. So I guess part of my challenge with what we're seeing on the AI side is right now there's a ton of capital coming into the top of the funnel because people believe there will be big winners on the software and services side. I don't think it's really clear how you monetize the AI side. And in my view, the question I ask is, am I better off buying AWS shares or buying NVIDIA because they're going to get most of the capital allocated to the sector? Or am I better off making a higher risk private market bet on one of the services startups that's building on top of this infrastructure?
A lot of AI head fakes, which you've talked about, Dylan, as well. So what are your reactions there on where to better focus to benefit? Look, NVIDIA is the obvious thesis. That's done well, but NVIDIA has its own supply chain. Then you've got the Amazon, Meta, Google, which has their own supply chain, and Broadcom is helping to play a key role in that. How do you see those key value drivers, and to Meltem's point, on the private side, where are the best returns on capital?
So on the private market side, right, I think that's a really interesting theory. Most of the AI startups working in various algorithms are not going to get any business, or they're not going to get enough business to sustain. But some of those companies will turn into lottery tickets, right? I think it's pretty clear if you had invested in, say, Character AI last year, amazing returns, right? Because Character, now they're raising in the market again, and amazing valuation, and their usage statistics are off the chart, right? Like people using Character AI, for the average user uses it for 2 hours a day, and it's like, what? Why? You would think, what? Why? But then it makes sense when you start looking into the demographics of who's using it and such. But it's, some folks are at least getting the usage. Some folks are not getting any usage, but they're starting to generate. They're getting very little usage, but they're charging right out of the gate. Some folks are not going to get any usage or money in the door from their customers. So it's a really much like a lottery ticket thing. Whereas investing in an Amazon or a Google or an NVIDIA, how much can those stocks run up from here is always the question as well.